Hi, this is Mark with Ease Investing. Get ready to never be confused about the difference between buying a call and selling a call. This is going to be the best video that you will watch, and you will fully understand the differences between the two. Watch the video till the end so you can completely understand the difference between buying a call and selling a call. Let's use our imagination. Imagine that today's date is May 3rd, 2025. Imagine you are hanging out with your best friend. You and your best friend love stocks, but you and your best friend are disagreeing on how much a stock will be worth in about a month from now. Today, you currently own 100 shares of the stock, and the stock is valued at $12.90. So, you currently own a total value of $1,290 of the stock. You think that the stock will be worth less than $1,450 on June 6th, 2025. But your best friend strongly disagrees and thinks the stock will be worth more than $1,450. Matter of fact, he thinks that the stock will be worth more than $1,475 on June 6, 2025. If you make your best friend a promise, your best friend is willing to pay you $25. The promise that you have to make your best friend is that you will sell your 100 shares of the stock for $1,450, even if the stock is valued at more than $1,450 on June 6, 2025. You are confident that the stock's value will be less than $1,450, so you happily agree and make your best friend this promise. You think your best friend is a fool for giving you the $25 for making this promise. But your best friend is confident that the stock's value will be worth more than $1,475 on June 6, 2025, and your best friend thinks you are a fool for agreeing to sell the stock for $1,450. Your best friend is convinced the stock value is going to be worth more than the $1,475 on June 6, 2025. If the stock's value is less than the $1,450 on June 6, 2025, then you are correct and your best friend is wrong. You would simply keep your best friend's $25. Congratulations, you made $25 off your best friend. Let's find out what's in it for your best friend and why your best friend would pay you the $25 for the promise that you made to your best friend. If the stock's value is more than $1,475 on June 6, 2025, then your best friend is correct and you are wrong. You would sell the stock for $1,450 even though the stock's value is worth more than the $1,450. So you're pretty much capping the value of your stock at $1,450 if it is worth more than that on June 6, 2025. And your best friend starts making money when the stock's value is more than $1,475. So, for example, if the stock's value is at $1,600 on June 6, 2025, then your best friend would profit $125. And if it's valued at $1,600 on June 6, 2025, you would have sold the stock at $1,450, even though the stock's value is at $1,600. Since you sold the stock at $1,450 and the stock is valued at $1,600, you missed out on $150 of stock gains. But remember, your friend did pay you the $25 up front, so you really only missed out on $125 of stock gains. In summary, if the stock's value is less than $1,450 on June 6, 2025, then you win the $25 and your best friend loses the $25. But if the stock is valued at more than $1,450, you start losing out on profits. When the stock is valued at more than $1,475 on June 6, 2025, then your best friend starts winning. The more that the stock's value is on June 6, 2025, the more money that your friend wins, and the more money that you miss out on. If you understand this real life example, then you now understand the difference between buying a call, which is represented by your friend, and selling a call, which is represented by you.